Hey everyone, Dalton Grados with Grados Capital here for another market newsletter for the week of August 18th to the 22nd of 2025. We're going to cover a number of things as we normally do. We're going to start on the charts, then we're going to get into the fundamentals and our earnings and what we're going to be looking for in the coming weeks with the Fed rate cut here after their Jackson Hole meeting. So a lot of exciting things coming up in the market. Let's first take it to the charts. We're looking at the S&P futures here, which is typically what we focus on for this newsletter. By the way, if you are just watching on YouTube here, go ahead and subscribe to the newsletter to get it in your email inbox. First link in the description. Totally free, no upsells, but it is a Substack newsletter. Whether I write it in written form or do a video like this, it'll always get emailed to your inbox, totally free, just setting up our weekly prep for the week. Now, last week we talked about this market and we excuse me, we had this nice uptrend here, this uptrend line, which was broken to the downside. And then I said the 6250 level really had to hold because that was our previous highs before Liberation Day, right? This whole drop down and subsequent recovery was from the Liberation Day tariff announcement. Before that, these were our all-time highs, holding right around the 6250 area for the ES futures. Again, your numbers may vary a little bit if you're looking at the S&P Cash Index or the SPY ETF. But 6250 was really a strong level here, previous highs. And we came down, we flushed down right to that level and picked on right back up to new all-time highs. So that shows me a lot of strength still left in this market. These drops happen very quick. This was 1 day, 2 days that we dropped from the all-time highs all the way down to that 6250 level. That can be scary for a lot of people. But then look, I mean, it was just a total buyable pullback there to the next all-time high. So where do I see us going for this coming week? And what I would say is it's kind of there's not a whole lot to say, right? We have all-time highs. We have the 6,500 area is clearly going to be a big area of resistance. So anything above that, I would target your next logical numbers. 6,550 and 6,600 will be levels to the upside. But to the downside, we have some space to fill. So it looks like on the close here on Friday, we had sort of a topping tail candle. And we could drop back down to a nice healthy pullback to these previous highs around 64.30s. And then below that, we would then target the 63.50 area again. And then below that, the 62.50 level. Now, if we got back down here to the 62.50s over the course of next week, maybe the next couple weeks, that could be now in danger because we tested, we supported. If we test again, that could make that support potentially weaker for then a drop all the way down to really not much support until the 6100s there. So just some levels to look at there for the coming week. With the events coming up this week, it's likely that we could also just kind of get some chop in this range, right? Getting some balance here between the previous highs that held before this drop here to the 6250s, those previous highs of around the 64.30, 64.50 area, all the way up to the 6,500s, sort of that 50-point range could be a tight area of consolidation for us before the market makes its next move. Now, when we're looking at the events for the week heading into next week, let me just bring this into frame. Okay, so kind of a light week going into this week. That's why I say odds would favor likely that we will chop around here for a bit because the Fed is going to be meeting in Jackson Hole at the end of this week, and the market is really going to be waiting on that September Fed announcement on September 17th. That's really the next big event that the market is waiting for, is where we are expected to get a Fed rate cut. Now, I want to spend a few minutes talking about this potential rate cut because this is the CME Group Fed tracker, Fed Watch. And so far, based on the interest rate futures trading, we have an 84.6% chance. In other words, 84.6% of traders are betting on us getting a 25 basis point rate cut on the September 17th meeting. This rate decision will be decided on in this Jackson Hole meeting that's going to be coming up at the end of this week, but we won't get the announcement until September 17th. So market is really building anticipation for this big event. Now, this number earlier last week was around 92%. It has since, from Wednesday of last week to today, it has dropped 8% in odds in terms of the Fed rate cut. Now, what's interesting here is that we had a hot inflation number last week. So if I go back to last week, and if you're watching CNBC and all the news channels, you probably heard about it. But this number right here, this past Thursday, the PPI data came in very hot, 0.9% as opposed to 0.2% expected. Now, what does this mean? Let's break this down. First of all, PPI is Producer Price Index. This is what essentially the inflation is for producers, not consumers. CPI is Consumer Price Index. This is Producer Price Index. So if the PPI, the producers, are experiencing more inflation, more cost rising for their goods, that is essentially going to pass down to the consumers. And so we saw this very hot number last week of PPI indicating some sticky inflation. And this can be also attributed to tariffs, right? So the producers are starting to feel the burn of these tariff policies that have been put in place. And we're seeing producer inflation increase, which will eventually be brought down to consumer inflation, which brings me back to this Fed rate cut, okay? Last week, these odds were up to 92%. Now they're down to 84%. I would be watching this page. Again, this is the CME Group Fed Watch tool. You can Google it. I would be very interested to watch how this number adjusts throughout the next couple weeks. While it looks very, very likely at this point in time that we will get that rate cut and the Fed has been pressured to make this rate cut, there is no reason for them to cut rates if inflation is still sticky. And if we're getting some increase of producer inflation from these tariffs, which we can assume will pass on to the consumers, it may be very dangerous, I would say, for the Fed to cut rates. Now, we've had healthy labor market numbers, and if we're having sticky inflation, then why would the Fed cut rates? I mean, we're in an environment now where, again, the market's rocketing to all-time highs. People are, Bitcoin's rocketing to all-time highs. People are buying their fart coins and they're gambling on sports, and everyone's happy with the market hitting all-time highs with the Fed rates where they currently are. And if the Fed were to cut rates, that would really just add fuel to the fire. But again, the Fed has to be smart and look at the data and not be politically pressured. And so we'll see how these numbers play out. Again, that Fed Watch number, how that plays out over the next coming weeks. Morgan Stanley is betting on the Fed not cutting rates. What we don't want to see, what the Fed doesn't want to do, is cut rates too soon and then have to hike rates again because the inflation spiked. That would be the absolute worst case scenario. And if that happened, the market would surely throw a temper tantrum. But the Fed is being pressured to cut rates too. You don't want to cut them too late. So it's really going to be something to watch for. And again, just so we're being clear, the numbers I would look at are inflation prints and seeing if inflation is still sticky. And we're also going to be looking at our economic indicators, things like unemployment data and manufacturing PMI, which we have, again, if we look ahead at this week, we have some of those numbers coming out. First of all, the FOMC meeting minutes are going to be on Wednesday, so just be looking out if you're trading in that. Unemployment claims we have on Thursday, and Powell speaking on Friday. And we have manufacturing PMI on Thursday as well. So we want to see, in order to justify the rate cut, which is what the market wants, we want to see inflation numbers decreasing, and we want to see the economy holding steady and getting worse. Because if unemployment claims and manufacturing PMI is getting worse, then the Fed would also be pressured to cut in order to essentially make borrowing and lending money easier to help support the economy. So that's what we're going to be looking at. Okay, inflation coming down, economic health, unemployment claims, manufacturing PMI holding steady or getting worse. That would pressure the Fed to cut. If inflation is holding higher and the economy is not getting worse, the Fed is not really pressured to cut. And if the Fed does not cut in September, at least with these numbers the way they currently are, the market will throw a temper tantrum. Morgan Stanley is betting on the Fed not cutting. They're going against this 84%, Morgan Stanley is, because they're saying the data doesn't make sense for them to cut yet. So again, I'd be watching this CME tool to see how these numbers adjust over the next couple weeks. If this market is betting on a rate cut and this number stays high, but we don't get a rate cut, the market could throw a temper tantrum, meaning a pullback. If we do get a rate cut, investors will get what they had hoped for, and the market should continue on as normal, hitting new highs. But again, these are the things I would be looking for over this week and the next coming weeks. Now, as far as earnings, nothing too big coming up. If you're into these stocks, Palo Alto, Home Depot, TJX, Walmart, just some value stocks, but nothing really big reporting earnings this week. So again, my bias heading into this week is going to be chop in the markets between this tight range, 6,500 to 6,400, because the market's going to be really just anticipating. The market's going to be coiling up to anticipate what this Fed rate cut is going to be. So I expect neutral to bullish action for this week and the next coming weeks, but we're going to continue to monitor this data. And again, all of this is my opinions. None of this is financial advice, but make sure you like the video, comment, let me know your thoughts, let me know if I'm missing anything that you think is important, and subscribe to the channel and subscribe to the weekly newsletter on Substack. Thank you very much, guys. I will see you next time.